So let's take you through the marketplace right now. Yesterday was the first trading day after the public holiday. The broad equities index, that's the Nigerian Stock Exchange, Osha Index fell 1.30%. It was a lot deeper than that intraday, but that's where it finished off at 2:30 local time. Let's show you the basic data as you have them on a daily basis. So we look at the Osha Index now to 30,527.07 on the ticker tape, and the equity cap down about 176 billion naira. We lost nearly 180 billion naira yesterday on the first trading day. Investors came back from the holidays with a very negative sentiment. So that has spooked the general market, and we're down on the equity cap to 13.444 trillion, shaving about 180 billion from all that we gained in the weeks before the Tuesday and Wednesday public holiday. So what is the activity level? Very small size, a little bit around our daily average in terms of volume, 217.3 million for 5.82 billion naira. That's quite good in terms of the naira value, and in terms of deals, 3,686. But looking at the sectoral performances, the top 5 sectors which everyone tracks almost on a daily basis, using them as a gauge of the market. You see the oil and gas there reading 2.03%. The banking sector, consumer, industrial goods and insurance actually trade water. They ought to be in red. Oil and gas was the only green shoot we had on Thursday. And who were the big movers in the oil and gas? 2 of the listed energy companies. Forte Oil, as you may have heard, is paying 115 kobo special dividend due to the restructuring the company is doing and a major divestment, and that moved the share price up 2.23%, less than 140,000 units to 27.50. So that's one good news there. Yesterday, June the 6th, was the closure date for the books as far as Forte Oil was concerned. Then you find Owando. The morning after securing a slamming order on the Securities and Exchange Commission, investors' sentiment remain positive and strong on this particular troubled energy company, finishing 4 naira, up 5.26% at the closing bell. 6.2 million ordinary shares of Owando were traded yesterday. If you look at Double One PLC, tracking a bit of a shy in terms of volume, 5.178 of what Owando did. The price of Mobile, which was Double One, was unchanged at 175. If you go down a little bit, then you look at Japol, much smaller in terms of market cap, 1.42 million ordinary shares at 28 kobo, finishing there 3.70% in the green territory. Across to the unlisted securities market with me and see a very tepid Thursday for the NESE over the counter, 744.61 reading on the USI, negative 0.05%. A very small day in terms of transactions there, but the market just a bit of a small pullback for the NESE. But again, if you look at the fixed income space, where treasuries had a very big jump on the day, that more than 100 billion matured treasuries were on the market, 133.97 billion naira traded via the FMDQ OTC Securities Exchange in 316 transactions. We'll chew that a little bit later. But 2 big stories within the banking space came in yesterday. Ecobank Transnational reporting back to the market. It was subscription 4.6 times of his $500 million Eurobond, and the yield coming down on that. That's good news for the company. On the flip side was Union Bank saying it's going to cut 54.458 billion naira out of its share premium account because the bank is battling legacy debts and transactions, reporting a deficit in its 2018 financial statements. So let's throw this to Andy Sako, who is a trader with Capital Care Trust Securities, is joining us via telephone from the marketplace in downtown Lagos this morning for this conversation. Andy, good morning. Welcome to the program.
Great to have you on the line, Bosin.
Thank you so much. We appreciate your time. Let's start with Union Bank. This is one bank, Nigeria's second oldest bank. But
Yes.
do you think Union Bank will, with this plan for next week, Monday's extraordinary general meeting or Tuesday's extraordinary meeting, be able to clear up this legacy debt, all these historical problems bedeviling this big company?
Well, it's quite an interesting twist of events. And I dare say to you, Boston, that you better pray that you have a better thing to inherit than to inherit some level of liability, as is akin to the experience Union Bank has had. Interestingly, like you said, of course, it's a long-standing institution in the financial market space, but it has been bedeviled by quite a number of lagging considerations in the past, which have left the current Union Bank that we do know with legacy issues. Don't forget, Boston, that in 2017, the bank had to write a whopping sum of $247 billion off its books. And so, to answer straight to your question, we truly do hope that the $54.45 billion that is intended to be written off this time around will truly put paid to the liability that has remained hanging on the neck of Union Bank. As a matter of fact, the necessity of it, which is for me the attraction in it, is the fact that hopefully they will clean up the books and therefore restore the retained earnings, which ought to be the source from which dividends can be paid to shareholders, will come back into the positive territory. As an institution, as a bank, the only source of paying dividends is obviously from the retained earnings that the company is able to build up over time. And so one of the things that certainly erodes the retained earnings is continuing losses. Unfortunately, Union Bank, despite the age, had to be bedeviled by accumulating losses over the years. And so as we speak, if this exercise, which is proposed, is the access to the shareholders, maybe very soon shareholders of Union Bank will be rekindled to what they were accustomed to in years past. So this is a step towards a restoration of hope that had been lost, hope of a giant. But the good news again also for me in all of this, Boston, is the fact that it shows the strength of this bank. Indeed, if you do recall their slogan, big, strong, and reliable, even though they have changed to something more, catchy for the current generation, smart, and simple, and all that. I truly do hope that we're retracing the old steps, returning to the old paths of productivity, paths of rewarding shareholders, and paths of confidence. So, by and large, if this does come true, I think it's going to truly be a positive tonic to the life of Union Bank.
Yes, Andy, well said. Try to balance hope there with where we're coming from as far as Union Bank, but 54.458 billion naira out of a share premium account is a whole lot of money on the table. In fact, that will almost fetch you 2 new banking licenses with the central bank at 25 billion naira apiece.
Yeah.
This will get you 2 new banking licenses. So it's huge as it can get. And when a company like a bank dips its fingers into a share premium account, that is something of concern that everyone should take very particular note of.
Yeah, and I do think that truly that it's a realistic step to take. Look at it from this way, Boston. If you had 2 banking accounts, one is in debit, the other is in credit. The reality around you is the fact that the net effect of both accounts is really what you're worth. And I think Union Bank has come to that realization that, look, we cannot be keeping one account, in this case, the share premium account, plotted in a positive, while they retain earnings account, from which actually we ought to reward our investors, is in the negative. So it doesn't really make sense. That's why they call it a reorganization. So just rearrange your affairs so that at the end of the day, the true benefit that you talk about with respect to all stakeholders will begin to permeate beyond the board, the management, the staff, to indeed the real owners of the institution who have lost so much over the years, but yet are hopeful. And I think one of the things Union Bank must celebrate on a continuing basis is the fact that it's enjoyed, continuity with respect to patronage. And given its size and age, people have over the years kept faith with it. I truly do hope that this faith will no sooner than later be betrayed, or that it will continue to remain fresh in the minds of the board and of the management of this big and looming institution, who truly can still regain a position of old in the new dispensation.
Okay, well said. Andy, a final one with ETI, which is also in the news within the last 24 hours with the conclusion of this $500 million Eurobond. Do you think this will also be part of getting Ecobank Transnational Incorporated onto a blue ocean?
The story of Ecobank for this is a mixed grave. I do think that they've, tried over the years to weather through the dominating landscape of the African presence. I do think it's truly a Pan-African bank, as it were. It's been enjoying some, relative strength and stability over the years. And I think that this kind of capital raising, which is a good source of funding, at least if not for diversification purposes, is to ensure some level of stability in its capital structure. Bulletin, sometimes in April, they were able to raise $450 million in what is described as the denominated senior unsecured bond, a 5-year tenured bond for that matter. But you do recall that at that time they raised it at 9.75%. And because it's denominated in dollar terms, that rate or yield, as it were, certainly is a nice attraction for investors. But it gives me some concern because of the cost implication on the bank. I truly do hope that the very reason behind this capital raising that they have enjoyed across the globe will truly impact on their bottom line. Because if you're raising in dollar terms, funds at a rate as high as 9.75, that's fairly expensive. But I do trust that, of course, the managers of the funds would have looked at, the benefit that is likely to accrue from it. The current 50 million raising, of course, you can say it's a bit discounted, being reduced to 8.25. That's relatively cheaper compared to 9.75 from where they started in April. But even at 8.25, to my mind, it's still looking, fairly high, which is the reason, to my mind, also the fact that it was oversubscribed. Of course, you don't need to tell a flag
Andy,
what is good. Yes.
Andy, we have just about 1 minute, so we want you to very quickly touch onto these issues, which is not a bit of a breaking news. How is the market community this morning reacting to Dark Communications, Repower AIT, suspension of its operations by the NBC, the industry regulator? This is a company with about 4.8 billion naira market cap as we speak, about 12 billion shares in issue. But the share price hasn't really moved the needle at 40 kobo per share since 2019 started. What's the thought on the market street this morning about Dark Communications PLC?
Well, Dark Communication, like you rightly observed, is a company that has truly been living not outside the realm of the doldrums. And I do not see any significant sign of relief that will process it away from where it is currently. And therefore, I would be curious to see any significant behavior around that stock, particularly because we are not accustomed to even knowing the depth of actions by this typical company. They've truly been in the leeway and out of total view of the market. So at this time, I think it's premature to think that something obviously is going to happen around. Maybe as the days go by and we begin to get more revelations as to what may likely ginger the performance of this company going into the future, investors are likely to take another look at it. But for now, it is truly overburdened and lying in the doldrums.
Do have a great trading day. Andy Sako, trader at Capital Care Trust Securities and a member of the marketplace. Thank you so much, and also enjoy your weekend ahead. Thank you so much. Let's change tack a little bit. And it's been a very interesting week for the UK markets with the visit of the US President Donald Trump. So as the market looking at what are the big stories, President Trump, US President, is a big story anyway. And I'm sure Juliana Olayinka has that on her list of the big stories in the UK market this week. When US President comes visiting, that's a big one on the lineup, isn't it?
Good morning, Bruce. And yes, it is a big one, but Donald Trump has gone, and another leader who has gone is Theresa May. Today, she's officially stepped down as Tory leader. Big story here. And another big story is that the FTSE edged higher this morning. The FTSE 100 was up 30 points at 7,290 shortly after markets opened, and the FTSE 250 was up 22 points. Sharp rises in Shell and BP shares helped the stock index gain for the 5th consecutive session, which is big news here. Economists are also predicting that the FTSE 100 is on course for its best week in 2 months. This is easing fears of a global slide into recession. Now, both in currencies, the pound slipped 0.18 cents against the dollar to $1.27, and it slipped 0.37 cents against the euro to €1.12. Later today, the Bank of England will release a survey on public expectations for inflations in a year's time. Now, UK inflation rose to 2.1% in April from 1.9% in March, just marginally above the bank's 2% target. And this has been a common trend of the past 2 years, so a lot of people are going to be paying close attention to this.
Juliana, you work and live in London. I'm sure you're paying a very close attention to that inflation, because that affects your purse. What happens to your pay package, isn't it? So, would that be a big story for next week? Would that be something everyone will be watching over the weekend? What the BOE comes up with, to digest it over at the dinner table for families, the cafes and all of that, and how folks move forward from there?
I must say, yes, the Bank of England's results will be taken a close look at. But the biggest story out of the UK this week, after Trump, has to be the struggling UK car industry. It's in big trouble. Now, earlier this week, the American multinational automaker Ford confirmed that next year it will be closing its factory in Bridgend, which is a small town in Wales, just outside Cardiff. Now, that closure brings with it the loss of 1,700 jobs, and this is just the latest in a series of severe blows to the UK car manufacturing industry. I'm sure you're aware Nissan, Honda and Jaguar Land Rover have all scaled back their operations here, due in part to Brexit uncertainty, but pressures from a tough global market. Yesterday, the GMB union, a massive union that looks after workers' rights, they released data showing that the UK has lost 500,000 manufacturing jobs over the past decade. So if there's going to be anything that people are talking about this weekend over the dinner table, it's really Brexit and the fiasco that it's causing. Britain in a really deep hole here.
Yeah, that's expected, Juliana. Thank you so much. Whatever you are discussing over the weekend, let's get together sometime next week if you can share some of them here on the show. Business and economy, that is. Thank you so much, Juliana Olayinka, member of our team out of our studios in London. Let's take a break, everyone. We'll be right back.